Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on the companies we mention. Please do your own research.
Hello and welcome to Monday Upbeat Markets with me, Graeme Dickson.
And me, Kevin Hornsby. And Graeme, you look like you're in a lot nicer place than I am anyway, and your skin is glowing from being on the slopes, so it's good to see.
Yeah, it's a nice thing to do. I haven't done it for a long time.
So whereabouts are you?
I am in Courchevel in France.
Okay, very good. So you got a group of guys and you got in the car and you drove?
Pretty much, yeah. Just some of the old favourites. So yeah, we just come out here and the powder is unbelievable. The sun is shining. Can't complain.
Yeah, absolutely.
How about you, Kevin? I'm sure the sun is shining in Egypt.
Well, the sun isn't really shining. Well, the sun's shining behind the clouds, but it's cloudy, sunny. Yeah. Just been feeling miserable for a couple of weeks. Had this, I don't know whether it's COVID, man flu, whatever. So feeling pretty miserable. But hopefully this week's going to see the energy return. Yeah, hopefully.
Yeah. Get you firing on all four cylinders. Okay, so what we're going to talk about today, we're going to talk about EnergyPathways. They've got lots to say about the Section 35 and some comments about the NSTA approval. And then we're also going to be talking about Ajax Resources, where they want to talk about Appian's latest investment. So beyond that, we're going to be talking about certain stocks and shares, about the markets per se, and also about commodities. So enjoy the show. And it's a warm welcome to Ben Klube, the CEO of EnergyPathways. Ben, how are you?
Yeah, great, and great to be here. Thank you.
Just a quick sort of synopsis of what EnergyPathways is about for people that are first on this episode, or first new to EnergyPathways, please.
Yeah, so EnergyPathways is an energy transition company, which is listed on AIM, and we're developing a large-scale energy storage facility using geostorage features in the UK, offshore in the Irish Sea, to develop a project that we call MESH, which we think is going to be a game changer for the UK's energy resilience and future energy security.
Okay, and for those that don't understand what MESH means, it's the Maritime Energy Storage Hub. Is that correct?
Yeah, that's right.
Yeah, okay. Now, I mean, your company is very topical, I would say, at this moment in time, because there's lots of conversations about energy storage, and there is this war going on in the Middle East. And I just wanted to see how this plays into EnergyPathways' hands.
Well, yeah, it's really brought to attention the issue that EnergyPathways has been pursuing for the UK, which is the importance of energy storage to Britain's energy system to ensure it has resilience to global supply shocks and hike prices, which is exactly what's being experienced through this war, and storage systems are a key tool to improve the UK's energy independence and its resilience to global shocks such as this.
Yes, yeah, I can imagine. Well, it has been a shock. I've just filled up my car with petrol, and I was shocked to see the price. I know you don't deal with oil, but in terms of gas prices, I've seen that they've almost doubled it. The UK gas prices have doubled in a month.
Yeah. So the facts are these: that the UK's primary energy sources still principally come from fossil fuels, around about 75%, and the dominant energy source for the UK is natural gas, and that's around about 40% of the UK's energy source. And at the turn of the millennium, the UK was actually a net exporter of energy and a net exporter of natural gas. But with the decline in North Sea production, the UK now roughly imports about just over 50% of its natural gas needs, and with that continued decline, Britain will be by the early 2030s be importing over 90% of its natural gas requirements during peak demand periods, i.e., the winter, from imports. Now, in the UK's energy system, it's not just a matter of natural gas, because in terms of the impact on pricing that we're experiencing now, it actually also flows through to the entire electricity system, and that's because with the market structure that the UK employs, electricity prices are set by the marginal supply, which is that which can be in effect dispatched into the market. And the UK relies on gas power generation to do the heavy lifting of providing dispatchable power into the grid. And due to that connectivity, Britain's electricity prices are set by gas power generation, not the renewables that is becoming obviously a more dominant component of the electricity mix. So a price shock in relation to natural gas, which is driven by a global gas market, which is highly connected, flows through not just to the natural gas consumption of the UK, but it flows through to electricity prices. So measures which can essentially store natural gas, and I'll come to our other storage attributes, but as measures to store natural gas at scale gives true resilience and protection against the global gas markets when prices can peak, and it then has a buffering impact on gas prices. Now, this is nothing particularly new, and it's not a theoretical concept, because the world has always been aware of the risk of Middle Eastern, let's say, supply shocks and as you've just mentioned, in filling up your car with petrol today, and the global community entered into agreements at the turn of after the 1973 oil shock, and countries agreed to have, in effect, 90 days of oil storage in their countries to protect against just these very events. And UK is a participant in that. So, and you might have noticed that in the last, just over a week ago, the International Energy Association, who's responsible for establishing these national oil stocks, made a release in order to create a buffer and protection against the high prices. No such thing exists for natural gas, so really it's every country to its own to manage the impacts of global gas prices on their energy systems.
Very interesting. I tell me if I'm wrong, Ben, but are you typically gas prices are higher in the winter in the UK and lower in the summer periods? Is that a fair assumption, or is it just purely?
Yeah, it is. The global gas market is crashingly seasonal. So high demand during the Northern Hemisphere winter, and lower demand during the Northern Hemisphere summer. So it's not just a UK thing. This is the big demand centers are across North America, UK, Europe, and Asia. Northern Asian economies. So it's predictable and very seasonal, and obviously, well, not obviously, but high demand periods due to natural market forces correlate with higher prices generally.
So in general, then the time that Energy Pathways presumably would buy gas to store in their caverns would be in the summer, and then you would sit on that until there was a time when the demand was required. I mean, would that gas stay in there sort of indefinitely until the demand? How does it work? In terms of releasing that gas.
Yeah, in broad terms, that's the role that gas storage plays in other countries, in that it is to address the seasonal demand cycle. There's a filling season during summer months, and it's then sort of to see through the winter period. So other countries have established to varying degrees their gas storage capability just to deal with this very matter. Europe actually has gas storage capacity. The EU, I should say, has gas storage capacity in the order of about 86 days of supply and then, for example, China has in the order of about 48 days of gas storage capacity. In the US, about 20% of domestic demand comes out of gas storage. Now, in the case of the UK, it has in the order of 12 days of gas storage capacity of supply, and but in comparison, the UK is not positioned as well, let's say, as other countries for these sort of situations, and so we think there's a growing market for demand for gas storage capability, and the UK government, I believe, recognises this fully, and we are actually invited to participate in a recent consultation that was started by DESNZ at the end of last year, which was called the Gas Security of Supply consultation, and we contributed to that. But it's a well understood issue, and expansion of gas storage capability in the UK is recognised as a much needed thing.
Well, that's really interesting. I mean, naturally in autumn last year, you got this. I don't know if you call it approval or of a Section 35, which can you just elaborate on that and the significance of that?
Yeah, so the Section 35 is a process where we've made an application for the MESH project to be designated under a national planning approval process to seek a development consent order for the MESH project. So that runs through the Secretary of State for Energy, Ed Miliband's DESNZ department, and that application we made. The conclusion of it was that the project was recognised as a project of national significance. So we get the benefit of this intended fast-track planning approval process for the MESH project. Now that designation, it applies to the part of our project which is the long duration energy storage component, which is a key missing part of the UK electricity market challenge going forward, which is when the wind's blowing, there's excess demand constraints, and the UK government is seeking long duration energy storage to harness the renewable energy that is being generated and to enable it to be dispatched into the electricity grid when renewables are not abundant, long short of it. And and long duration energy storage is the kind of the missing piece of the puzzle to enable a renewables dominated grid to function in a resilient and effective manner. So that's the part of the project that is was designated as a nationally significant project, and it since that designation was made in the end of September last year. The company's been pressing ahead to progress that project and bring it into for a development consent order application as soon as possible.
So this is interesting because this is different from gas storage as such. Am I right in saying that this could be the air compression, some other energy sources? It's not necessarily relating to gas. Is that correct?
That's right. That's right. In that the projects that we have, which is the compressed air storage project, is separate from the gas storage project. They just happen to overlap in terms of geological storage features, and they actually do work in harmony because they create significant value synergies between them. But they're two projects running on, let's say, different planning approval processes, but both sizable, very sizable in their own right, and can both play a major contribution towards the UK's energy future.
That's very good. Okay, I mean, of course, it's the curtailment costs as well. I think that you mentioned in our previous podcast that there was a huge amount the government had to pay because of the supply of wind power was not being used at the time when it was being deployed, and so they had an obligation with the providers of that wind power. How would Energy Pathways help in that respect in perhaps reducing those curtailment costs?
Well, at the moment, curtailment costs or constraint costs associated with the electricity grid when there is excessive renewable generation in the system is largely lost. However, it's still paid for in effect by the consumer and through your one's electricity bill. So the cost of wind curtailments in 2025 was estimated to be in the order of 1.5 billion that was in effect added to consumer electricity bills. And according to government forecasts, by 2030, costs associated with balancing the grid are going to increase to as much as 8 billion per year, all to costs to be passed on to consumers. So the size of the prize here is to be able to harness essentially that wasted renewable energy and then reuse it as dispatchable electricity into the grid when renewable intermittent power is not available or less abundant. And clearly with those numbers, that's a huge size of the prize that we're looking to secure. And all our modelling is supporting that MESH can make a big contribution to that market opportunity.
So it's a win-win. The consumer pays less, the government pays less. Energy Pathways, in theory.
So yeah, what it does in effect is, and how it manifests itself through to markets, is that those wasted costs in effect get stored on behalf of consumers, and then it gets dispatched into the wholesale or the electricity markets, and that is an enabler to reduce the cost of the flexible low carbon power that MESH produces. And according to our estimates, our cost of low carbon flexible power relative to the power generation, which is doing the heavy lifting for dispatchable or flexible power, which is gas power gen, will be a fraction of that cost. So if you recall, the UK's electricity prices are entirely set by that the price or bid for dispatchable power, and so we believe we can be very competitive in that market, and the knock-on is that it can create downward pressure on UK's electricity prices.
Very good. Okay. EnergyPathways raised £1.4 million back in October. Can you say anything about how you are for funding, etc.? Do you have sufficient funds to carry out what you need to do over the foreseeable future?
Yeah, we've had sufficient funds to do what we need to do. That last couple of raising was a great enabler for the company, and yeah, and we continue to always look for attractive financing options for our shareholders, and structures which can be non-dilutive for shareholders, and also bring in new type of investors and backers to the project and to the company.
The ever sort of the question that everyone's been on their many people's minds is about the NSTA, which of course now I think is certainly helped me in my understanding that actually now you've had the Section 35 approval, that you don't necessarily need that for anything that's outside of gas. NSTA is purely gas. Is that correct?
Yeah, actually the license we've applied for relates to gas storage, natural gas storage, and hydrogen storage, and obviously a big part of what we're offering here is the gas storage component of our project, and that we're hoping that there'll be a decision very soon on that matter, and I think with the the recent events, and as I mentioned before, the matter of the security of supply consultation run by DESNZ, which we participated in, I think the policy discussion within the UK government is getting much sharper, let's say now, so we're hopeful that there'll be a decision coming very soon.
Okay, very good. In terms of like the size of the potential of EnergyPathways, could you in your head, with all the different components that you have, can you give us a sort of idea of how potentially the size of EnergyPathways could become as a business if, say, everything went your way, and then also on the other side of the scale, if say some of them things went your way, but you're still waiting for the other ones to manifest themselves. Could you give us a sort of a rough guide of how that would look?
Yeah, look, so the system that we're designing from, if we take the LDES point of view, so we've disclosed previously we're working very closely with Siemens Energy in the design of the LDES system. We're designing that as a modular system, so it can be replicated. So in short, the modular system we've designed is a 320 megawatt unit with 7 days of duration of supply. So from an LDES point of view, that's a very attractive facility. That duration of supply is highly significant, and also point to note is it's a very flexible system in that we can ramp up and ramp down in the order of about 5 minutes, which means that we can access virtually all material electricity markets operating in the UK. Now, so we design it with as a modular system, but to deliver on the market needs of the UK or the needs of renewables dominated grid systems, and so our ambition is to deploy this system elsewhere, and the demand for long duration energy storage is huge in the UK. The government seeking to implement somewhere in the order of 8 gigawatts of supply from LDES, and given that we think that our system will be highly cost competitive in that market, and does not require significant, if any, subsidy to develop it, then we think it can play a major part in the growth of the LDES market. And so let's say the potential is huge, and the key thing about being able to do this in a cost-effective way is to be able to connect the sort of the turbine compression systems of our system with salt caverns. And it's where does Britain or other countries have suitable salt caverns to construction potential? The license that we're awaiting that covers a huge salt area with we see as potential for constructing in the order of 60 salt caverns within it, and our modular unit, from a compressed air point of view, only requires 4 salt caverns. So just in that license area alone, there is huge potential. Now, there's other salt sequences which are suitable for LDES development, long duration energy storage development, offshore in the UK, that we're very interested in, we're working on, and that essentially replicate the same business model of harnessing excess wind generating capacity, which is being wasted, and storing it and dispatching it through our system. And so we're looking to take this modular design elsewhere. Other countries also have a similar geological attributes relative to renewable grid structures, and so it can be taken elsewhere. And we've entered into a global cooperation agreement with Siemens Energy, very much with that growth trajectory in mind.
Okay, so this is, I mean, it's not just a UK story then. This is something that can be rolled out to other countries throughout the world. I mean, I'm looking here at, I know it's an unfair comparison, but Centrica, with their rough storage facility, I don't know how many days of supply they can provide the country with energy. Do you know the answer to that, Ben?
It's the nameplate existing storage facility at Rough is circa about 6 days, I believe.
6 days, yeah. So, I mean, and you're talking about providing, up to 7 days, I think. And I know that Centrica has, its own natural gas provisions, but they also they own the Rough storage facility, and there is a market cap of £9 billion, and EnergyPathways is 13.3 million. It's literally a David and Goliath sort of comparison, although I know it's also an unfair comparison by my own admission, but it does give you an idea of at least some aspect of the size of the upside if all the pieces of the jigsaw puzzle can come together. So yeah, well, it sounds really exciting, Ben. Well, we look forward to reading on the news about your progress and you coming on to tell us about it all on Monday Upbeat Markets. So Ben, thank you so much for coming on and joining us, and I wish you the best of luck for the remainder of 2026.
Thank you very much. Thank you. Appreciate it.
Thank you. And it's a very warm welcome to Ippolito Cataneo of Ajax Resources. Welcome, Ippolito. How are you?
Very well, thank you, Graeme. Great to be here.
Great stuff. Okay, so for people that don't know about Ajax Resources, can you give us a brief summary of what you do?
Ajax Resources is a natural resources investment company listed on the Aquis Growth Market. We have a market cap of £9 million and a cash position of just under £3.5 million. And we are a company focused on projects, natural resource projects in South America. So we have 4 projects in South America. We have 2 in Argentina. One is the Eureka project, which we've recently drilled. The second one is the Macacha project, which is a copper-silver project with a historical JORC resource. And we then have, we've conditionally acquired a project in Chile called the Paguanta project, which is a polymetallic deposit with historical JORC resource as well, silver, zinc, lead, and copper prospectivity. And finally, we have a gold project in Brazil, which we've acquired from Appian Capital. So we are the only, as far as I know, the only UK listed junior company with a major investment from Appian Capital, which is a $5 billion private equity group focused on mining.
Well, that's a fantastic summary. And I think we touched, I think the last time we spoke was very early January. And we spoke about Appian back then because I think they already had did they have a small stake in you anyway from another? They didn't have some stake.
No, they came in conjunction with the acquisition of the Prairie Verde project. Yeah, so they've just come on board. Of course, our intention and the sort of ongoing dialogue we have with them is to be the junior company of choice. So the fact that they took a significant shareholding in our company as consideration for the Prairie Verde project reflects confidence in our model. In fact, in the regulatory news announcement that we put out to announce the Prairie Verde acquisition, you'll see that there's a statement from Appian which kind of explicitly endorses our growth strategy, which was we very much welcomed that, and it was very nice to have that endorsement from such a prestigious and successful fund. And so the idea is to Prairie Verde is a project that we currently have a non-JORC compliant resource rather of 150,000 ounces. And our intention is to, and the way we structure the acquisition is to take it up to initially 350,000 ounces, at which point that will unlock a further payment, and then all the way up to the 1 million number, which we believe the project has. And in fact, we've engaged as our sort of most senior technical advisor for this project. We've engaged one of the lead geologists that formerly worked at Appian. So we feel we have the right people to take that project forward.
And his name is Pereira, I think, wasn't it?
His name is Elton Pereira. Yeah, so that there is there's a commonality between in the names as well. So that should bode well.
Yes.
We hope for the for his attachment to the project and his belief in its geological potential. So we have these projects, and of course, going back to the sort of macro picture with Appian, they don't have a presence in Argentina. We are very big fans of Argentina. It was the first country in South America where we established ourselves. We are looking at some very interesting projects in Argentina at the moment. I've just come back from PDAC in Toronto, and that was a chance to really bizarrely, you meet a lot of people from South America in Toronto, which you perhaps wouldn't so easily meet in South America. So it was a good opportunity for us to accelerate some of the ongoing dialogues and conversations we had about new acquisitions. And so, as a natural resources investment company, we don't want to do too much and then achieve nothing, which is what some companies do. They promise the world and then unfortunately underwhelm expectations. We want to create value. So that mining is an expensive business. So we're very conscious of the fact that £3.5 million may be very positive, and we have no debt, so it's a very good position to be in for a junior company listed on Aquis. But in mining terms, that's still a small amount of money that we need to manage very effectively. So the rationale is to create as much value as possible and buy projects which have a very significant historical expenditure. So 2 of the 4 projects we have, well, actually 3 of them, because if Barrio Velho itself has 6,000 meters of drilling, which equates to roughly a historical investment of $5 million. But Macacha has roughly $20 million of 20 to $25 million of historical expenditure, and Paguanta has in excess of $30 million of historical expenditure. So, that's what we do. We focus on projects which have significant prospectivity, significant potential, but have as a basis, as a sort of starting point, quite a high degree of historical investment, which we wouldn't be able to front at this stage of our development as a business. So that's really we're kind of opportunistic by nature and by design.
Well, that's really interesting, because I saw that the Eureka project, you're drilling, or you were drilling, and then you suspended it because you've been approached, I believe, by 2 prospective buyers. So, I mean, I don't know if you can expand upon that, or how far you are with these discussions, and is there a ballpark idea that you can tell viewers what you as a low end and the high end, what you can expect to get from this, or is it still too early to say, or too confidential?
Yeah, so it's too early to really comment on that. The conversations are very much ongoing. The DD of these 2 potential buyers is ongoing, but we will update the market as and when there's any kind of material development in these discussions, which is still at a kind of early stage. So no binding commitment has been signed. We're very comfortable because we, again, this is a project that Ajax Resources, named as a company, had acquired for $6.5 to $8 million. Those are the historical numbers that we've seen. Back in 2010, we paid $170,000 in a single cash payment for the project. So our exposure to this project is small, and the value multiplying potential is large, right? Because we believe the project has significant prospectivity, and that's why we have these discussions in place. So the reason the rationale has been disclosed, Macacha is a project that has a more significant, much more significant historical expenditure. It's been drilled in a significant manner by previous operators, one being Alexander Mining PLC back in 2005 to 2010. So what we want to do is, I'm an entrepreneur, I'm not a geologist, and so we want to minimize dilution. We want this company to grow in value. And one of the key denominators that we see for companies that really are able to create value for shareholders is that revenue generation potential, right? So we want to be a producer, we want to be a copper producer, we want to be a silver producer. These are 2 metals that we like very much. And so Macacha has the possibility to be an open pit production project in 2 to 3 years, right? So it's already produced copper cathode. Historically, there was a pilot plant on site. I have a wonderful, our lawyer has, and we've agreed that he'll transfer this across to us. But he has a wonderful framed bar of copper cathode in his office, which is hanging over his desk. And so that was quite a symbolic artwork, if you like, that he has, because it showed us in very tangible terms that this project has has production potential and can be a producer. So that's what we want to be. We have 120 million shares in issue, and we don't want to dilute the board too much, because I'm the largest shareholder and I wish to remain so for a while.
That's really interesting. So I can see where you're coming from. Yeah, you dispose of Eureka, hopefully get a really good return, no dilution. You can then focus on other low hanging fruit within your portfolio. But let me ask you this question, and well, actually 2 questions. First of all, what happens if you don't sell Eureka? Okay, what's the contingency plan? And then the second question is, when sometimes it's kind of a weighing up situation where you have things that you can dispose of and things that you you can run, and sometimes you can sell the family silver to get the cash flow in, and then all of a sudden you realize that, you know, I ended up selling the wrong asset, the asset we should have, you know, developed and partnered up with someone to take it to its full potential. How do you weigh these things up? Do you have like you know, teams that you can consult and, you know, etc. to help you reach that decision?
Yeah, so we have a very good geological team that is growing and is fitting, increasingly being adapted to be, is being configured to be aligned with the portfolio that we're building. So a South American focused portfolio. And the answer is, well, if we don't sell Eureka, there's no downside, because as we explicitly said in our announcement, if it doesn't happen, we will just continue with our exploration activities and look to define a resource and then take things forward in the manner that we'd always set out to do. So I don't see that as a problem. Of course, the reason, again, to go back, the rationale is that we see there being more advanced projects in our portfolio which we can take us to production sooner. And so that is the simple commercial reality of our business. We are a natural resources investment company, and we will do whatever is in the best interest of the company to get to production, have revenue generation, minimize dilution, and get the valuation from 9 million where it is today to, you know, progressively, you know, 20, 30, 40, 50, and then 100, and then more. You know, Guardian Metals, as you would have seen, I always reference them in every single interview we do, but I know how close yourself and Kev have been to these companies, so it's worth referencing them at every turn, because that is the blueprint. You know, that there are other companies like that I mentioned as well. Amarok, that's another one. You know, these are companies that had a similar valuation to Ajax a few years ago. They chose the right projects. They diligently progressed them, and with a bit of luck and mostly skill and the fortune of the metal pricing, they got to where they are today. So that is the strategy. We're in here in this business to make money and to create value for shareholders, and so we'll do whatever is necessary to get to the valuation we aspire to achieve.
Very good. Now, I believe Zenith Energy have announced something in relation to, I think, a uranium mine. Is that correct? And I think it had your name against it. And I just wondered if there's any association with Ajax with this particular project, or is this something completely Zenith Energy related?
Yeah. So, I mean, as you know, I previously worked as Zenith Energy, and I continue to be involved in the business to a degree. And there's I identified those two projects. They are two extraordinary projects. They're two uranium mines, fully built underground mines, which were built in the kind of early 70s. I would say early 70s to the early 80s. They were in construction and fully commissioned by ENI, or a division of ENI, which is the national company of Italy. They had a uranium division that was set up for these two projects, which are the single largest uranium deposits in Italy. And so the idea is Zenith Energy is not a mining company. As you know, it's an oil and gas business, which has now become an arbitration play and has had a pretty good run in the last 10 days, I would say. I mean, it was a company that had a valuation of about £80 million last summer, and then it had the very unfortunate outcome with that second arbitration, which brought it back down to roughly 25 million market cap, and now, you know, as the third arbitration, which is a $560 million arbitration, $1 million arbitration, is the court. The arbitration is happening next month. So as that approaches, inevitably the market is warming up and investors are taking positions to potentially speculate on what that outcome might be. Obviously, the first arbitration was outstanding victory, albeit that was the smallest arbitration. So there's 3 arbitrations in total. But yeah, so going back to Zenith is not a mining company. That is what Ajax is. And the idea that Zenith publicly disclosed is that they wish to spin these 2 uranium projects out into a new listed vehicle. And so I will be one of the directors of this new business that will be listed, and all will be revealed in due course. But of course, all I can say is that I identify those projects. My name is as you say is connected with those 2 projects, and I am the biggest shareholder in Ajax. So you can maybe
Your own conclusion.
draw your own conclusions about what the future may hold. But of course, we want that will be a business that we will list on a very good market. Again, I can possibly disclose what market that will be, but you can make draw your own conclusions. But the point is that we see a lot of value for those projects, and uranium is a metal that I've always liked. In fact, I wanted Ajax to be involved in that metal, and in South America we are looking at some uranium projects. So that is, but Ajax is a South American focused vehicle, so that's why this other listed vehicle will focus exclusively on European projects. And so Ajax will never be directly involved in these projects. But yeah, that's the background to that. All will be revealed in due course. But a very exciting time, and the beauty of these projects is that they never went into production, and so there's a very significant. Again, it's the same model. It just reiterated in different shapes and forms and geographies. But the story here is of 2 fully built underground mines which were never into production, and that have a very significant deposit, which firstly needs to be redefined in accordance with modern reporting standards, because there's no JORC compliant resource for these 2 projects. And that in Italy, the way it works is there's a 3-year exploration phase, which is an exploration permit, and then you can apply for a mining license upon the conclusion of those 3 years, and then you can go into production. But the idea here is, again, to define the resource to a modern reporting standard, and then ultimately take the project forward. So a very exciting time, and yeah, I look forward to sharing more information on that in the future.
Is Italy pro-nuclear? I'm not sure what their stance is on that.
So that's, again, very interesting. So one of the reasons these projects never saw the light of day was that Italy had, after Chernobyl, there was a referendum in Italy. And that referendum there's a lot of ignorance associated with nuclear energy, because there's always in the public discourse about these matters, there's always a conflation of uranium extraction and nuclear energy, which, as we know from Australia, are 2 entirely separate things, because Australia has a ban on nuclear energy but has no ban on uranium extraction. In Italy, historically, they've been treated as one and the same. So the referendum, post-Chernobyl referendum, that was Italy was one of the leading, in the post-war period, was one of the leading nuclear countries that were favorable to nuclear. France and other European countries being rivals in that respect. And so, for various reasons, and Chernobyl was one of them, Italy decided not to. The people decided, very, very fearful of nuclear energy, and decided not to support any kind of nuclear energy pathway in Italy. So that was banned for a very long time. And of course, now with all the geopolitical tensions that we've seen that the world has been afflicted by in the last, has always been afflicted by, but in the last 2 decades, there's been all sorts of, very unsettling events. Energy autonomy has become the leading preoccupation for many European countries, and nuclear, and that's in conjunction with decarbonization, because we need energy autonomy, but we also don't want to have fossil fuels. And so the obvious question is, well, where are we going to get? There's more and more electric vehicles roaming the streets. How are we going to power this electrification that we so desire? We need to decarbonize, and so inevitably, I can think of no other fuel but nuclear. And so the debate in Italy has now gone back to, well, did we get this wrong? Have people now changed their opinion? Should we offer? There's a referendum today in Italy taking place about a constitutional reform. So it wouldn't be difficult to envisage a new referendum on nuclear energy at some point in the future. But the polls that have been conducted in recent years, and even the government stance on nuclear, is that yeah, I think if you stopped, if you asked people on the street, you would find that most people would be in favour of nuclear energy. So there's been a massive shift in public perception. But then again, we mustn't go back to the initial mistake that I mentioned, which is of conflating nuclear energy and uranium extraction. There's no ban on uranium extraction in Italy. There's no ban on uranium exploration in Italy. We are solely concerned with exploration. So nuclear is a separate debate, but of course we recognize that it's interconnected. So it'd be hard to have a conversation about uranium extraction without someone mentioning nuclear energy. But the comforting, the response that I can give to your question is that that debate is now very favourable to this endeavour that we have. So Italy is now finally, we hope, embracing that pathway. And so we've again spotted, we believe, a very, very exciting opportunity which has all the key ingredients that we always look for and which are very hard to come by, right? So that's the essence of what we're doing.
Very good. I mean, if you look at all the different activities that you have when you combine your JORC resource to hopefully targeted resources, so for example the Pereira Valera, is it how do you pronounce this, the
Perevello, yeah,
Perevello, excuse me. You're targeting hopefully a million ounces, and you've bought it for, I think, around about just over $2 million. Is that right?
Yeah, deferred,
of course, yeah. Before, I think $200,000 cash up front, and then some deferred payments, I think, in stock. But if you said the in situ value of that on the targeted basis is $5,000. I know it's not quite there yet, but $5,000 of gold multiplied by a million ounces, you're talking about a $5 billion operation that you've acquired for effectively $2 million and a bit of change. I mean, I know there's lots of steps, and I know it's. I mean, I'm just trying to paint the picture. That's one asset. Then you've got the other assets. If you combined, the combination of targeted resources and your existing JORC or your NI 33101, have you any idea what that potential value would be across the various assets you have?
Yeah, well, look, it's good to see things that way, and I agree. All our projects have it's very hard, I think, for me as a director to really make those kind of predictions and assumptions. But the base point, which is incontrovertible, is that we have 4 projects that have a high historical expenditure. So you put it's roughly $32 million at Peguanta, which we've conditionally acquired and we're just hoping to complete in the very near future. We've got roughly $5 million at Perevello. We've got 25 million, call it 25 million, probably a bit more, at Macacha. And then we've got the, I guess, not so much historical investment at Eureka because it was never drilled, but we've got a significant outlay of cash to acquire it back in 2010. So we've got 4 projects that have almost $100 million worth of well, actually a bit less, but we're more than $60 million worth of historical expenditure. So we're and we've acquired these projects for largely nominal amounts. So in a very strong metal pricing environment. So we think that there's obviously a lot of value there to create. Macacha, for example, is a project that has a historical resource of 6.6 million tons of copper at 0.6% and 18 grams per ton silver, right? So we think that project we can that there's the only target that concerns is the copper oxide, because Alexander Mining never explored the deeper sulfide horizon. So we think, I mean, some geologists in our team, and we put this in our announcement, think that there's a 5-fold increase that we can achieve in that resource, as well as potentially materially increasing the grade, if we finally drill that untested sulfide horizon, and then the goal there is to take it to production. So that is in itself, to answer your question, that is the 9 million market cap I don't think would last very long with that kind of value, that resource multiplication. So the idea between now it's always important to have focus on the long term, but also on the near term. So Makacha is very topical at the moment because we are imminently going to file our EIA, our Environmental Impact Assessment, which in Salta province takes roughly 2 to 3 months to be approved. And then on the back of that, so that once we get that approval, we will immediately initiate a drill campaign of up to 5,000 meters. And we have already got a very good partner who owns. We partnered up with the vendor of this project, owns a drilling company, a very successful man who has a number of interests, including a drilling company, and so we will most likely we'll run a tender exercise to determine the best price. But I think on the balance, on the balance probability, he will be the best priced provider, and so we will have. We don't need to raise any money. We've got the budget. We'll immediately initiate a 5,000 meter drill campaign, and on the back of that, we'll have an updated MRE, which we we hope will significantly increase that 6.6 historical 6.6 million historical resource. So there's a lot of value catalysts to get us to those numbers that that the metal on the ground would suggest. But even a fraction of that, I think, considering our 9 million market cap, would be very material.
Fantastic. Okay, just the last question. With the turmoil that we're all seeing in the Middle East, is that having any impact with Ajax at all?
No, I would say the only impact, obviously, the gold is it was normal. There's always, nothing goes up in a straight line. There's always a slight kind of fallback in the gold price has declined somewhat. There's a bit of uncertainty in the equity markets. Our share price has marginally suffered in line with most junior companies in our space, so nothing to be concerned about. I saw it as an opportunity to buy more stocks, so I added further to my holdings. So it was an opportunity for me, but no, I think we all hope that these conflagrations that are happening around the world will cease, and obviously if we were an oil producer, we would have been very happy by the oil price, not so much by conflict. But the answer is no. South America is one of the beauties of South America, is that it's a pretty stable region, specifically the countries we're in, Brazil, Chile and Argentina are very good mining jurisdictions. And so we haven't been affected, and my view is that as we continue to deliver and attract institutional money, because we've now that is the focus, right, in terms of our fundraising. We haven't talked about this, but where do we want to go in terms of capital market strategy? We want to attract as much institutional money as we can. We have the fortune of being the only junior UK listed company of an investment from Appian, and so we feel that will hopefully encourage further partnership with Appian, but also it will put us on the map of institutional investors and private equity groups, funds that would typically never look at a company listed on Aquis of sub 10 million market cap. But now what we've seen, and I can't praise Aquis enough, because we've proven that it's not where you're listed, but who you are and what you're doing that most matters, right? So there's another company which I really like called Delta Gold Technologies on Aquis. They've done exceptionally well, and both Ajax and probably much more Delta Gold Technologies for the time being has proven that it doesn't matter where you're listed. What matters is what you're doing, where you're going, and who's investing in your business. So we're listed in a very good market. Our intention is to list on another market as well in Europe. We've disclosed that we're looking at a Euronext listing in Europe, although that has its own bureaucratic kind of procedures that we have to follow and timelines, so that I can't really comment on when that will happen, but we're working away on that. And so yeah, I'm extremely encouraged by what we're doing. I'm very, very happy with the progress, and looking forward to getting our drill campaign underway at Makacha. We're also going to be drilling Pereira Velho as soon as we have all the completion docs kind of fully finalized. So we're currently engaged. We've announced the completion. We're now sort of implementing that completion on a practical level. But again, I've just had a call an hour ago with Elton that we mentioned. So we'll be drilling Paravello this year, and again, EIA approvals in Brazil take roughly 2 months. So in the next 3 months, we'll be potentially drilling 2 projects. And potentially completing other deals. So we're very, very excited, and it's a great time to be in mining, and a great time to be an Ajax investor, which of course I would say being CEO and the largest investor in the company.
Okay, that sounds very exciting. Very well explained. Ippolito, thank you so much for spending time with Monday Upbeat Markets, and wish you the very best of luck for the next few months.
Thank you, Graeme. Speak soon.
Thanks a lot. Right, so Kevin, that was those interviews we've just had. I think they were, they're pretty well set. Hopefully, once they get for EnergyPathways, once they get the NSTA approval, I think they're pretty well set. And the same for Ajax Resources, especially if they sell the S12.
Yeah, the energy pathways, as Ben I think adhered to, was that the NSTA thing is important, but it's not the everything, because they obviously can move forward with different things even without it. Though at the same time, why on earth would the government not give it to them? It would be mental for them not to do it, basically, considering they've pinned their flag to this particular situation. So it seems rather strange that it doesn't come. I think it's just administration and basically taking longer than they anticipated. And when you do speak to him, he's pretty confident they're going to get it. So let's hope that all comes to fruition. With regards to Ajax, I mean, we're in the middle of a hailstorm, if you like, in terms of all the things that are happening in the world stage. But at the same time, we're going to need copper, we're going to need gold, we're going to need silver, all the things that they're going to have. And Appian are obviously putting their money where their mouth is by saying we want a portion of Ajax. So I can't see anything but good coming from that in the longer term. And yeah, there's also other things that they're going to be working in conjunction with Zenith Energy and Ajax together. Zenith had some news today as well about the solar powers. Just more solar power coming online. It's going to be worked through. So again, the Zenith Energy one, the solar power itself, I think is going to be worth at least what the market cap is worth at the minute, as is. So the whole court stuff is going to be cream on the top, in all honesty. But let's see what happens.
Yeah, no, their share price has done really well, Zenith. I mean, it's literally as soon as the war in the Middle East broke out, it's almost as if people were looking for another place to park their money in, and Zenith seems to be a recipient of that. Apart from obviously the news they brought out.
Well, you've got a few of them now.
Yeah,
I mean, you've got Zenith Energy. You've got we had Panthera on yesterday on the roast, and then you've got GreenX. You had Emerson last year. All of them are in the same boat, aren't they? They're not dependent on resources or anything else that's happening. It's a legal situation. And it seems to be that the closer they get to those legal situations, then the more likely they are going to be to have a payout, or alternatively just be worth more. So yeah, it's an interesting way to invest. And there's a whole group of people actually who are just investing in that stuff, and because they can see that that they can get a return on that stuff by reducing it. There's also a £1 million raise from Kendrick Resources that was done over the weekend or late last week at 2.6 pence, about 10% dilution, £1 million. I was speaking with Colin Bird. Basically, the second rig's on its way down there. The third rig is going to be not far behind it, I think. Basically, to get them into a position where they will have 70% of that project because they will have an initial resource. It looks first class as an asset. I mean, this could be worth, this could be one of those stories. I mean, you talked to me about Eurasia Mining at one point, the story that went from, nothing to something very quickly. I just see this is another one of those stories. I can see this, it could 100 bag literally. I mean, and that's not me overzealous. And, from 0.25 to 25p is very possible. And even then it would probably only have a market cap of £100 million, so it's one of those things that could happen. Whether you want to be part of it, up to you really. But yeah, I think it's one of those fairy tale stories that if the resource is as we think, and the drill holes have gone in, there's still 6.1% of rare earths at the end of the hole, and they've got a whole load of other assays to do as well and start to drill themselves. If all of these come as anticipated, then this asset is worth, fully fledged, it's worth billions of dollars. Now, that doesn't mean it's going to be worth billions to Kendrick, but it's going to be worth 100, 200 million pounds. And from a market cap of $1 million or less, then you do the maths, you know what's going to happen. So, yeah. I'm excited about that one. So let's see.
Yeah, I mean, I put it past one of my sort of experts, shall we say, in the rare earth space. And I said, "What do you think of these grades?" He said, "He was like, they're actually very good grades." I mean, he was impressed. He said the thing to really validate it is to get some independent analysis on the assays.
Yeah, but they've had part of that. If you read Charles Archer's article, they had independent verification of the assays, because it was written in one of the I don't remember where it was, but there was a paper written about it a while back, which verified those grades. But yeah, Ethereum also had news this morning as well, and they've now basically done a deal in Rwanda for their East Inco JV with Wogan Resources. Now, there was a company in Australia who did a deal with Wogan Resources for the same type of thing, and it basically went from 5 million market cap to 500 million market cap within a year or two. The basic situation is now that if they have the resource, and obviously the main resource here is coltan, if they have the resource and they can supply it, then this is just going to be like, not printing money, but it is going to be just a money machine. So I think if people start to get on and understand that this is the case, and also that they have these lithosquare deals as well to actually look for gold and copper and silver in Morocco and Botswana, then I think people are going to start realizing this is a real company and it's going to be making a lot of money. £3.5 million market cap. This deal is transformational. Hasn't affected the share price at all this morning. But it is transformational. So I think when people start to realize the revenues that start coming, then they might wake up. But I think the market cap revenues in the realm of the market cap within 6 to 12 months is highly probable. In terms of free cash flow revenues, I mean, not just how much they'll actually be doing. So, that would be a game changer, and it could then be worth, 5 to 10 times that, based on the fact that that's the valuation for it. So, yeah, we will see what happens in relation to that over time, but looking very, very interesting.
Yeah, very good, very good. I see there's also some news from European green transition.
Yeah, that's a very interesting one, isn't it? The UK government just proposed that they would allow farmers, schools and industrial users to install small onshore turbines without permission. So no planning permission required, and all of a sudden you can have a wind turbine stuck up and generate your own electricity. Makes a hell of a lot of sense when you think about it. But European green transition are absolutely in the A1 spot to be the people who go on and help people put these in place, and also to maintain them. I think Kachel's done a cracking deal here in terms of the purchase price of the deal he's already done. They're going to be on the roast in the next week or two. But he's looking towards 50 million revenue with double-digit EBITDA margins. So, I mean, you're talking about 15% of 50 million, £7.5 million a year of EBITDA coming through on a basically on a utility basis. You know, it's like a utility stock, that these contracts are going to be for 10 years, 15 years, 20 years. So, you know, what is that worth in the market? I mean, pension funds and all sorts of things are going to be all over this, because they're going to want that guarantee of income and revenue. And you know, these things are going to have to be maintained, because if we don't maintain them, they're going to break. So, yeah, it's a very simple...
It's only market cap's only £19 million from what I can see.
Yeah, I think if you did the sums on that 50 million and said there was 7.5 million of free cash flow EBITDA, 10 would be very conservative, I think. So that would be 75 million, and I think more likely 15 to 20. So you're talking about 112 to 150 million market cap. Now that doesn't take into account anything else, as in this thing that we just talked about with farmers and schools and industrial units, and if anyone else takes on more wind farms, which is, I mean, the UK is trying to do that. So you know, it's not like they're not going to get other business as well, I think.
Yeah. Okay.
So it's looking good. But what's your thoughts on the world as a whole? It's going mental.
Well, it's like, I don't think we've ever seen anything like this before. I don't even think in the 1970s, when they had the oil crisis, then it was as bad as this. So it's difficult to have like very firm set views. Except I know that Trump is very markets orientated, and he will feel the pressure from the way the markets are reacting to this war. And I think he'll want to do something to reassure the markets, in my opinion. What are your thoughts, Kevin?
Yeah, I think it's much bigger than Mr. Trump. Ultimately, I think the US and Israel have called Iran's bluff, and now Iran is basically calling their bluff back. They don't need to win; they just need to cause havoc, and that's basically what they're doing. And they're going to continue to cause havoc. I don't see that that's going to change. I think if we go down the route, which is where we are now, of destroying each other's energy situation and then destroying each other's water situation in the Middle East, then I think, you know, you are getting to the point where there'll be no way back for most people. You know, it will be the GCC countries basically full on attack, and we're going to have a disastrous situation, I think. But the problem is that it doesn't take a lot to stop the Strait of Hormuz, and it also doesn't take a lot. The other flashpoint, which is off the coast of Yemen as well, to stop it going into the Mediterranean. Or the Red Sea, which then cuts off the Suez Canal as well. So their only aim now is to cause as much trouble as possible. And what have we seen? We've seen actually the reverse of what you would expect, because we've seen gold falling, we've seen silver falling, we've seen copper falling. We've seen all these things falling on the basis that they are the things that people have made the most money out over the last period of time. So it's been I'm going to take my profit out of these things and pay for the things that I have to pay for. So there's going to be an unrolling of trades, and I see this is what's happening at this moment in time. But I also see that the US has no choice. The US will have to print money, will have to effectively buoy up the US dollar. And if it does that, then the printing presses are going to start. What's going to happen? We're going to have higher gold, we're going to have higher silver, we're going to have higher copper, and we're going to have a lower valuation on the US dollar. That might take a period of time to unravel and come out the other way, but I don't see any other way that that's going to happen. I mean, you've got the most indebted economy the world's ever seen, and it's going to print more money and probably lower interest rates just at the time it shouldn't. You know, and I think economically we are in a situation of, I've said it before, an empire fighting for its position in the US, while the other empires are sitting back and saying, okay, do your worst, which is basically what they've tried to do. So yeah, economically a bit of a disaster, but I think longer term, as in maybe 6, 12, 18, 24 months, I think we're going to look back at this time and see, boy, gold was cheap, boy, silver was cheap, copper was cheap, all of those things. It was, and the resource stocks that have been smashed on the basis that people just had to get out. You're going to have the opportunity to buy those in the next period of time, and you know, you're going to be very glad you bought them, I think.
Yeah, it's interesting, you know, because in times of uncertainty, gold and probably silver to some extent were kind of safe havens, and I've just been puzzled by why they haven't been safe havens in this time of uncertainty. And so I thought I'd check on AI to see what they thought, and apparently they're calling it a liquidity vacuum. It's a short-term dynamic, but it's not a fundamental bearish shift on these commodities that we've just been talking about. So it's just a short-term thing.
Yeah, people need the cash, don't they? I mean, if you've gone long on something, but you don't own the stock, and all of a sudden it's dropped 30-40%, then all of a sudden you have to have the cash there. So the one thing that you hold that is liquid, that is in profit, is gold. So you sell your gold to cover this loss or cover this situation, and then you're able to get out. But you've lost your gold in the meantime. It is the way that I think the things being set up. So, you know, don't borrow to invest is the simple scenario, and then you can sit it out. You can sit it out. I still am very, very strongly oriented to the fact that real assets, like, I'm even knocking on wood here, wood, gold, silver, copper, titanium, you know, tantalum, coltan, you know, uranium, you know, you just keep naming them all. Okay, even GMET in terms of tungsten in America. You keep naming them all and you realize that they are real things, and people are going to have to pay real money for those. They're going to pay real US dollars for those. If there are many more US dollars in the market, they're going to have to pay many US dollars more for those products. Especially as the US dollar is going to be fundamentally weakened by this whole war thing, because people realize now, well, hey, the US maybe not just as strong and as capable as everybody thought they were going to be. You know, they go in there and destroy them and that would be that. Well, it hasn't happened. Israel is also getting battered as well, and Lebanon is getting battered. Nobody's talking about it. The one thing I've realized about this war, more than other wars, is the disinformation and the fact that we just haven't got the real information. I think we're getting disinformation from all parts, whether it be US, whether it be Iranian, whether it be Chinese, whether it be Japanese, whether it be the Middle East as a whole, whether it be Israel. We're getting disinformation all across the board. So how are you supposed to look at this situation and understand it? I've absolutely no idea, because I don't think anybody can.
No, yeah, I think you just have to step back and draw your own conclusions.
Yeah, step back and go skiing, mate. That's basically what you got to do. I am genuinely just sitting on my hands at this moment in time. I'm not doing anything, either buying or selling, and just sit and watch what's happening, because my thesis was clearly that we need these resources. That's not going to change. I don't think, no matter what happens in the world, we're going to need these resources. And I still think that thesis sits absolutely perfect. You look at Ajax Resources, great for those resources. You look at EnergyPathways, who's been on today as well. They're going to be providing a lot of those resources as well, and they're going to be required. It's as simple as that. Are those things going to succeed? I think they've got a very, very good chance they're going to succeed.
Interestingly, I was speaking to some guys on this trip, and they were saying that, the CEO of Uber is no longer there, and he's now setting up a mining company. So it's interesting that some people who were previously involved in the tech world are going into mining, and I've never heard of that.
Yeah, well, you look at all the AI companies now that are getting involved with tech companies. We've got the AI company now that's involved with Botswana Minerals that were on the roast on Sunday. We've got Ethereum, who've got the AI company LithoSquare, who are involved with Ethereum and AI. You've got Tether, one of the biggest, in inverted commas, crypto tech gold companies, now owns 50% of one of the biggest trading companies in resource in the world, and is buying gold like it's going out of fashion. Why? Because they all understand that to achieve their goals in technology, they need real things.
Well, Kevin, on that note, let's keep your heads down and see what happens over the next week. Okay, everyone, thank you so much for joining Monday Upbeat Markets. And remember, mum's the word.
This podcast was brought to you by Monday Upbeat Markets. If you would like to appear on a future episode of the Mums Podcast, please email mondayupbeatmarkets@gmail.com.